I'm Blue Match Flari, head of digital assets at T. Rowe Price, and you're watching Taking Stock.
And welcome to season 2 of Taking Stock down here from the iconic trading floor of the New York Stock Exchange. 2 minutes ago, here into the closing bell, the Einstein of Wall Street, Peter Tuchman of TradeMoss joins me now for his take on today's tape and much more.
You know,
VIX is down, dollar's down, market's up. What'd you see today?
You know, so for me, the market isn't particularly up. Yes, it is in the green for sure, but the way the market sort of fell off a cliff from 230 on, to me, is a big deal. And I'm not really sure whether it's this Treasury thing. There's a number of things going on around that. I think was sort of curious. I don't know. You know, even though yes, we're 1% off record highs on the SPY, which is great. But the way the market sold off late in the day, it kind of felt like there was some news out that we maybe are not privy to as yet, right? Because the market was strong. It hit a double peak earlier in the day. Technically, that was fine. Nothing technically showed that the market should break down the way it did from about 215, 230 on. But it was for sale, and the market really kind of came, you know, I mean, my interpretation is based on volume coming in for sale, and the way they broke it down, we were up 30 handles at around 245, and that was strong. And then slowly, that strength eroded. It's a lot different than what we've talked about over the last number of days, where we came out of the gate strong, and the buyers got sort of tired and pulled back a little. This was interesting. We'll probably find out about it tomorrow.
I got this crowd applauding for you, the one and only. Thank you for being here. Nixon 5, time for the close. More Taking Stock coming up after this. There you go. Got to hit that gavel with some authority. The team from Citro Tech down here on the trading floor doing the honors. They will also join us here on the broadcast in just a bit. Shares of CITR having a nice day, up 1.3%. Your final tail of the tape on this, what's the date? Wednesday, August 19th. The S&P up 0.2, the Dow up 0.2. The New York Stock Exchange Composite Index very close to those all-time highs, up 0.3. The small caps, the best of the bunch, up 0.5%. Healthcare, discretionary materials, the best of the S&P 500 sectors. Tech, industrials, and financials are the laggards. To the Dow we go. Outperformance from Merck, Salesforce, and Amgen. Your Dow laggards, however, Caterpillar and Goldman Sachs. Those are the two most weighted names in the Dow, but they are most in the red today. Magnificent 7 trading mostly higher despite a tough tape for tech. Tesla up 4% as of just the last few minutes. Nvidia down. Shares of SpaceX. Jay Woods, not a Mag 7, it's kind of a Mag 7, down 3% today. Jay Woods joins us now. Thank you for being here.
Hey, it's good to be here. Good to be back from vacation. Shout out Sea Isle City. Good time.
Sea Isle City, that's where you were.
Yeah.
I saw you hit the links.
Yeah, I hit the links, toes in the sand, a lot of day drinking. It was great.
Dude, it's great to have you back here. I appreciate this, too. We have a lot to go through. The president today saying we have a deal with Canada on the trade deal. We were worried about that today. We got this Treasury stuff. Let me get your take with 2 different retail reactions today.
Okay.
We'll start with Target going up, and we'll start with TJX. Storyline there, maybe a distressed consumer, bit of a pullback. What do you see in those names?
Yeah, well, we're seeing that these retail stores, it's a question of who's doing well, who's not, what management is steering the tide, what's not. And to me, Target has been the turnaround story of the year. Michael Fidelke, the new CEO, say that 5 times fast, he has really gotten things in ship-shape condition over at Target. Stock's up over 60% year to date. A lot of concern that, well, maybe this quarter's profits were because of tariff redemptions, but no, I mean, they have been month over month, consistently getting that consumer back. They had a little problem a few years ago with this woke thing. I think that's behind them, and now inventories, fine, sales, fine. Let's see how they do back to school. TJ Maxx, on the other hand, you know, we talk about K-shaped economy and the lower leg of that K, the lower end consumer, they tend to go to TJ Maxx. They're struggling a little bit. That was concerning. Down 5% year to date. Not really sure why they and Walmart, which will be the bellwether, they report tomorrow, have been struggling so much. I think we'll get more out of Walmart from that story than we will from a TJ Maxx. But to me, Target, the story of the day.
So let's talk more about Walmart. We get those quarterly results before the bell tomorrow. That is the largest employer of Americans outside of the federal government.
Yeah.
Shares up about 4% on the year. It's been, you and I were looking at the chart earlier, it's been steadily making higher lows at least since July 23rd. What are you looking for? It is a big one.
Yeah, no, well, I'm watching price levels. Let's see, it's below the 200-day moving average. For those at home, that to me is a barometer of health. If it's below that average, the average price over the last 200 days, something's not right. And we need to see Walmart get back above this 118 level. But yes, the last 3 months going into this quarterly report, it has been slowly, steadily rising. If it dips, I think that person out there waiting to get into this stock will have an opportunity to do so. But I'm more curious what they're talking about as far as the guide goes, as far as that consumer goes, because on the one hand, you have Target and Home Depot, pretty solid. Lowe's, and then TJ Maxx kind of missed the mark. So I think Walmart will be a better gauge, but we did have disappointing retail sales last week while I was not here. And, I'm a dork.
That's how it
what
happens.
can I say? But I'm still in vacation mode, JD. But as a result, Walmart is going to really be indicative of that consumer, see how they're spending.
I hope producers can pull up a chart of mRNA. I love the ticker symbol from Moderna, by the way.
Stock of the day.
You know where it closed? 177% up. Surging after announcing one of its vaccines improved survival rates, more specifically for melanoma patients. On the technicals, you look at a chart like that, it's not just an average gap up. That is an enormous gap up.
It's a solid decade worth of gains.
So
right
what
there,
do you do with that on a chart? How does that force you to rethink your previous technical levels, if at all?
Come to me to Fordham University and get in my class and we can talk in depth. But no, for those watching this stock gapped up on the opening. Those gaps tell stories. The story, obviously, they have that new drug with Merck to melanoma. I couldn't think of the name, melanoma. But investors cheered, and not only did they cheer, they poured back into it. So you use that gap as information, that opening gap. Now when it will probably recede a little bit. We don't know if this drug is coming to market, what the price point's going to be, but it is positive, and now you use that gap as your floor. If you're in the stock, if it gets below there, then maybe you want to fade out of it. But to me, this is strength. You buy, and it should continue over the next coming days, maybe weeks, until we get more clarity on when this drug is going to be ready for market, what price point it's going to be, and how well received it will be by the consumer.
Yeah, speaking of melanoma, don't forget, always wear your SPF, folks, watching at home. I got less than a minute left. The big guy in the room, the big gorilla, next Wednesday. The 26th.
Oh, NVIDIA.
You're looking around. You're like Jensen Huang
Joel
here.
Embiid is here.
What are you looking for out of the big one next Wednesday?
NVIDIA, I mean, you hate to say this one stock is the most important stock in the world, but I'm going to say it's the most important stock in the world. It is the highest weighted stock market cap-wise, so it will move markets. What are we going to watch? We're going to watch the guide. All right, they're going to beat. I'm going to promise you, they're going to beat on earnings. They always do. The guide should be good. How is that spend going to work? Are they issuing any debt? That's been a new theme that we've seen this quarter. And, how does the street react to it? It's trading a little off all-time highs. It has room to go to 240, close around 216. Look at your little chart there. I don't know. I was down here studying to be on with you. But NVIDIA was, it's well off its lows. It's in this midpoint. I think good news, it could run to 240. The question is, will it be good enough to lift the market and get to new highs? We are in those seasonal headwind times, September and late August, worst time of the year for the stock market. And NVIDIA can change that.
It closed at 217.68.
All right,
there you go.
216.
The great Jay Woods, thank you for being here. As always, my man Skylar, grab your mic. We'll talk with you again soon. Welcome back. All right, here are the latest Polymarket odds for World Series champion. Let's go. LA Dodgers, no big surprise. Odds-on favorite to repeat at 33%. To be fair, if you found a way to pay Shohei Ohtani only $2 million a year, you too would probably be favored to win the World Series. New York Yankees next up at 11%. How about the Brew Crew from Milwaukee? Rising odds to win their first ever title at 10%. The Tampa Bay Rays may have the 8th smallest payroll in Major League Baseball, but their odds sitting at an impressive 7%, along with the Atlanta Braves. PCA, Pete Crow Armstrong, and the Red Hot Cubs next at 6%, followed then by Boston and Jay Woods' very own Philadelphia Phillies. Game 1 of the Fall Classic scheduled for October 23rd. Bobby, we got to take a look here at Scott's Miracle-Gro. It's a weird story, kind of a fun one, up 2.6% on the day. As you may know, there is lots of construction going on right now on the south lawn of the White House. This morning, the president praising Scott's Miracle-Gro by name for not only donating the grass for the project, but also donating to the Trump campaign. The president calling Scotts, quote, a great company with the highest quality grass. And shares quite literally moved up by the minute while the president was talking, up 2.6 today, up 5% since the start of 2026. Well, the New York Stock Exchange's very own Ashley Mastronardi sat down with Artlist's Ira Belsky to discuss the ways artificial intelligence is changing video production. Take a look.
AI video platform Artlist has been hitting new milestones, including $300 million in annual recurring revenue and launching Artlist Studio. Joining me now to share more is Artlist co-CEO and co-founder Ira Belsky. Ira, welcome to the New York Stock Exchange.
Thanks for having me.
All right, so congratulations on your milestones, $300 million in annual recurring revenue, Artlist Studio. Can you break these down for us?
I think in general, like any other industry, AI is very disruptive in the AI, video, production, all of that. We've been in the space for a while, and AI has sort of took us to a new growth trajectory. So we build application layer based AI for video production. You can think of anyone starting from like prosumer, YouTuber, all the way up to media and entertainment, and yeah.
All right, and can we hit on those specific milestones, the financials, that $300 million number, and also can you tell us what Artlist Studio is doing?
In terms of the numbers themselves, you know, AI is a completely different beast. Like you start offering AI, the excitement and the amount of people who want to try it out is insane for us. Like just as a reference, if we look at new users, Q4 2025 versus 2024, 600% more new users than we used to have in our old. We used to sell stock for music, sound effects, stuff like that for the video production industry. Moving to AI really like improved our growth tremendously. And what Artlist Studio is essentially a way for people to create AI videos in an intuitive, creative way. So it removes the very logistic prompting process and makes it a lot more creative. So you choose things like you cast characters, you scout locations, you frame, you direct, versus going in and writing extremely long prompt technical work. So it sits on top of all of the existing models. So you have models from Google, OpenAI, Chinese providers, so pretty much everything that's relevant for your video production, and basically organizes and builds a layer where you can scale your video production on top of all of them.
And how does it fit into existing workflows?
It syncs to everything existing. So with AI, this is actually the first time in history where production, which is the part of actually going out to shoot, part of it can move digital. Most of digital video work has been post-production, meaning after you shoot videos. And with that, basically, it's replacing some of what you would go out to shoot, but then the rest of the pipeline is very much the same.
Can you describe the quality of your videos and how you get them to look realistic?
I think it's a combination of the models themselves getting better. So you have more newer models come out like every other month. And with that, you also have to build the right workflows and prompt engineering behind them to make sure you get the actual best results. So you move from generating maybe an image using one model, let's say a Google model, and maybe that's best for use case for that. But then we know how to direct it to the best video model to move and make the image a video. And just making all of these transitions as optimal as possible results in extremely high quality.
And what impact do you think that AI is having on the larger creator community now and in the future?
I think AI is going to open up a whole new industry. Like if you look at traditionally who could afford to make high quality content, it was mainly like traditional media and entertainment. And right now, we're definitely going to see a lot more created globally. So you can expect seeing the next Breaking Bad series come out of someone's basement, which is cool. But then obviously you still have the need for curation and like the Netflix of the world having to sort of sign these talents. But you're going to not be reliant on them greenlighting project, but you're going to see just projects being made all over the globe. And the talented one will probably get still the same exposure.
All right, Ira Belsky, co-founder and co-CEO of Artlist. Thank you for joining us at the New York
Thanks for
Stock
having me.
Exchange.
Thanks for having me.
Welcome back to this Wednesday afternoon broadcast of Taking Stock live from the trading floor of the New York Stock Exchange. Jing Wang joins us now, the CEO of OP Labs, live down here on the trading floor. Really nice to see you today.
Hi, thanks for having me.
Of course. Okay, so everyone knows we've been covering it on the show every day here, Jing. Not a great year for crypto prices, but maybe a great year for crypto infrastructure. Help me better understand that disconnect between the two.
Yeah, I think there's something really attractive to the human psyche about looking at numbers going up and down, but what we're really focused on is enterprise adoption, regulatory clarity. And so even though the prices have not been the best, the metrics for activity on our platform are hitting new all-time highs.
What do you see in terms of stablecoin volumes and tokenized assets? What does the data there tell you that maybe the rest of us may miss if we don't track those things as closely?
Yeah, one crazy fact is in 2025, we settled more stablecoin payments volume than Visa, so that's 18 trillion. And so I think, crypto is pretty slept on still, and enterprise adoption is definitely heating up.
I want to ask you about EtherFi. Help me better understand this and our viewers watching at home. I know it just moved its crypto card business. What does that launch prove about using blockchain really for everyday purchases and payments?
So it used to be the case where if you wanted a credit card, you would have to go through your bank. EtherFi is not a bank. You can get your debit card and credit card from EtherFi. And a couple months ago, one of their users used their card to buy a $1 million apartment in Dubai. So not only is it faster, more efficient infrastructure, you can also do more with it than you could with previous infrastructure.
Wow, that sounds quite nice, I think, to many people watching home. I know you're also making a big push at the same time into Korea. Why is that market so important, really, to what you think is the next phase of crypto adoption?
The United States is leading right now, but it is not the only country or financial system that wants to upgrade its financial infrastructure. The last 12 months has been a scramble to double our headcount in markets like Korea and Japan because regulatory clarity is also heating up there.
At what point does blockchain, you think, stop feeling like traditional crypto and just become much more of a part of kind of the normal, everyday cadence of the financial system?
I think the better question to ask is, at what point does blockchain finance feel better than present-day finance? And I would argue that it already does.
Okay, finally, do you think the next wave of crypto adoption comes from people who may not even realize necessarily that they're actually using blockchain technology?
Totally, and I think that regulatory clarity, like what the SEC announced today, will help accelerate that tremendously.
That's awesome. Well, speaking of tremendous, you've been a tremendous guest. Jing, really grateful for your time. Thanks for coming by the New York Stock Exchange and for being on the show today.
Thank you for having me.
Of course, we'll talk to you again soon. Don't go away. A lot more Taking Stock coming up right after this. Welcome back to the broadcast. Our third and final guest of this half-hour edition of Taking Stock joins us now. Say hello to Wes Bolson, CEO of CitroTech. Really nice to see you down here today.
Thank you, JD. Great to be here.
What was the experience like for you and your team to ring the closing bell? What does the moment mean to the CitroTech community, you think?
Yeah, I think it was a wonderful opportunity to ring the closing bell because I think people are starting to become aware that we need to prevent fires. CitroTech is a company that is going to start preventing fires versus just suppressing them. And we're one of the few companies on the New York Stock Exchange that is actually preventing versus just reacting to things.
I feel like it's always an important time to have this conversation. Here in New York, we were reminded of that this year with all the wildfire smoke coming from places like Canada. Most people might be familiar with the red fire retardant that drops from airplanes. How is your technology fundamentally different?
Yeah, fundamentally what you're doing is preventing the ignitions under power lines, along railroad lines, along roadsides, and it's the first EPA recognized fire retardant that's safe. All the red stuff has some things that build up, and we need to move to more friendly, environmentally friendly fire retardants, and that's what CitroTech is doing.
How do we shift the model, the thinking, from suppressing wildfires to preventing fires in the first place, to your point?
Yeah, I think what we have to do is we have to start saying for every dollar, it's like an ounce of prevention is worth a pound of cure. If we spend $1 towards preventing ignitions with CitroTech, we wouldn't have to have as many airplanes up and air tankers dropping that. But where it's going to come is hearts and minds in communities. It's going to start with people saying, I need to protect my home. It's very personal to saying, how does my home and my community get protected? And how do we have people prevent those ignitions from ever starting?
And it's not just there, you're taking it a step further into the lumber itself, a new partnership with Hexion to build fire protection directly there. What could that mean in terms of how we build homes, specifically in wildfire country?
Yeah, the Hexion CitroTech joint venture, the Hextech venture, is meant to say, globally we will manufacture fire retardant treated lumber and building materials in a way that makes homes withstand the wildland urban interface where those fires are burning down homes. So Hexion is an amazing partner, 100-year-old company, and it was great for CitroTech to be able to form that joint venture to get CitroTech into the market with the biggest wood producers and lumber producers in the world.
Even bigger picture, what could this mean for would-be home buyers who struggle to even get insurance if they live in so-called fire country?
Yeah, JD, we're seeing homes that are being built in that high-risk fire threat area that are either being uninsured or they have insurance of last resort. We're seeing insurance companies say, hey, if you use CitroTech or if you install some things around your home, we can actually help you with your deductions. And you're not using water, you're using something that lasts until it's physically washed off from that vegetation.
You know, it's amazing here in New York. I grew up very close by. Wildfires, these summer kind of regular patterns, this was never a part of my childhood. And now it's a part of something we contend with seemingly every summer, at least here in New York and so many other places. What does it take to get ahead of the next big generation of wildfires in the US and in Canada?
Yeah, I think as we look towards preventing those fires, I think the federal government and state governments are going to start bringing in contracts for ground-based, where we don't have to send up aerial tankers. We get ahead of it by precision applying CitroTech where those ignitions are likely to start. I'm going to bridge over to AI for a second. We have more data and more knowledge on where we should be preventing fires, and I think CitroTech will start to adopt some of the breakthrough AI modeling to know where we should be preventing those fires.
It's a really important story coming at a very important time. I'm grateful for your time today. Wes Bolson, CEO of CitroTech. Congratulations. Come back and see us anytime.
Thank you, JD.
Don't go away. A lot more Taking Stock coming up after this very quick break. Welcome back to the broadcast. Time now at this point of the show for the latest headlines in the world of fintech, crypto, and artificial intelligence for your Wednesday. At this hour, the crypto majors having a very nice tape. ETH up 10%, Bitcoin up 6%, right around 68,746 and change. Next up, Marvell teaming up with Google to develop custom chips for its AI infrastructure while giving Google the option to buy as much as $12.2 billion worth of Marvell stock. Marvell up 168% so far here this year. Finally, the SEC set to propose new rules to make it easier for crypto companies to raise money without full securities registration. The move comes as the Clarity Act on Capitol Hill remains stalled. And now Money 2020's own Scarlett Sieber is back with a new edition of Hindsight 2020, where she breaks down key dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind back to August 19th, 2004. Google goes public. At the time, many people saw it as a search engine, a really good search engine, but a search engine nonetheless. In hindsight, investors weren't buying search. They were buying one of the most powerful business models ever created. And that business model? Attention. Google had figured out something extraordinary. Every search reveals intent. Somebody searching for pizza is different than somebody searching for mortgages or plane tickets or insurance. The search itself becomes information. And that information, it becomes very valuable. Rather than charging users, Google built a system where advertisers paid for access to intent. That's a subtle distinction, and it changed everything. For decades, businesses paid for audiences. Google allowed them to pay for moments of interest. Fast forward to today, digital advertising powers enormous parts of the technology ecosystem. Countless platforms, apps, and services are built on variations of the same idea. Understand behavior, create relevance, monetize that attention. Google's IPO wasn't just a public offering, it was a public demonstration of how valuable information could become. That is your Hindsight 2020, because some of the world's most valuable businesses aren't selling products, they're selling proximity to decision making. And with that, back over to you.
Tomorrow here on Wall Street, which will be Thursday, August 20th. Had to check the date because I already forgot. In the morning, we will get the latest quarterly results from Walmart, Alibaba, as well as John Deere. Investors will also have the opportunity to digest weekly jobless claims, which, of course, as it does every Thursday, crosses the wire at 8:30 a.m., 1 full hour before market open. And this time tomorrow after the close, the latest quarterly results from Ross Stores. Your final tell of the tape on this Wednesday, August 19th. The S&P 500 in the green, 0.2%. The Dow 30 components up 0.2. The NYA, aka the New York Stock Exchange Composite Index, up 0.3%. And the small caps, the Russell 2000, the best of the bunch on this Wednesday here on Wall Street, up 0.5%. Healthcare, discretionary materials, the outperformers in the S&P. Merck, Salesforce, Amgen, the big winners in the Dow, and Tesla, the big winner in the Mag 7. That'll do it for this Wednesday afternoon edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Thanks for watching. We'll see you again tomorrow.